Hi everyone. Today I'm gonna bring one of my AAA setups which I use with Gexbot, and also gonna show you some concepts and why when you guys look the maximum positive gamma, maximum negative gamma, these levels tend to work as pivot levels, and I'm gonna explain why, which is very important. And I decided today to make this video because today I had one of my what I call the triple A setup in my three accounts. I usually don't trade all together. Um, I go. These are my two accounts with Apex, $300,000 each, and this is my account with Earn to Trade, which is $50,000 one. So I'm gonna explain why I decided to take this kind of exactly the same trade in these three accounts. I usually don't do this unless I have a AAA setup. So to do that, I'm gonna explain so many cool features from Gexbot. So the first one is like, remember what they do, they classify in Gets profile, they classify calls versus puts, or how they call it, excess of gamma in calls and excess of gamma in put. So basically what they're measuring is the imbalances of calls versus puts. And as you can see in here, you can have a clear vision of a picture of what is dominant in the market. What's you see all these call gamma is compared to this put gamma, you can see here is bigger. But I want to show you something very cool and why I took that trade. So my analysis starts when the market starts at 9:30 in the morning. And one of the things, this is the spot price, but probably, I mean, we can see what happened during the day, but please focus on the maximum positive gamma and maximum negative gamma. So the day starts and these maximum and positive gamma were quite close. So that wasn't telling me anything. So basically, what I had to do, I have to wait until I have more kind of clear picture what was happening in the market and what was kind of the clear direction for today. So around 9:57, we still have these two uh, maximum positive gamma and maximum minimum gamma. Maximum negative gamma. They were quite close. So I wasn't doing anything. I was just waiting to see what happened. And look at this time. It is almost 10 o'clock in the morning. We can see there is some more positive gamma than negative, right? But as you can see, there is no gamma in this area, right? So that basically is telling me is is um, is very difficult that the price go to these levels above because there is no gamma here. It's like steps. In order to get to the third, fourth, and fifth floor, we need the steps to go towards them. And if we don't have steps, it's going to be quite difficult. So that was my first clue to kind of wait to see if we can have a short position today. And have a look what happened between 10 o'clock in the morning and 10 o'clock and 55 seconds. Suddenly we have this big kind of excess of negative gamma, which is 35 million, right? If you compare to what we have above, when the price was 10 o'clock in the morning, you can see that these levels of gamma, they're quite small compared to this one, right? This is 35 million, and this one below is 25 million. This one's above is 7 million, and this one is 3 million. So this is a cool feature for Gexbot where you can actually check and have an idea which side could be pulling prices towards them. Think of this as magnets, right? And the strongest the magnet, the stronger it would be the force that will bring the price towards them. So to be honest, at 10 o'clock in the morning, I have kind of bearish view, but I usually don't enter on these trades because I got this kind of maximum negative gamma, which as you can see from kind of 10 25 seconds to 55, basically changed everything. So basically all I had to do was wait. And I like to take, when I take my short positions, I like to take on these maximums positive gamma. And I'm going to explain why in a minute. So I don't like when the price crosses like this without any, how can I say, any friction. Why? Because this is just a knee reaction. And usually, and I say to you guys, stay recording every day, take screenshots, because usually what happens is the price will come back to it, right? And people trading only on technical analysis, they will say, oh, this is, we broke a level, I don't know, this support level, and price will try to go and find liquidity. It could be right. I can't argue with that, but we trade gamma, right? And I know in these levels of gamma, there is usually is friction, right? So look what happened. The price tend to go towards them. But again, look, we don't have a clear steps, like who can go to the second, third, and fourth floor in the positive side of gamma. So for me, that's very difficult, the price to go above this level. And on top of that, I have this maximum positive gamma, which is, it's a reversal for me. If the price wants to go higher, it has to have it has to have many levels of gamma with big levels, big money there. But at the moment we have nothing. We have like 1.8 million. We don't have nothing on those strikes. And the next one we have only 2 million. And on the downside, we have in total basically 30 millions there. And now we have 40 million. So it's been increasing. So what is this telling me is the options guys, they were adding puts on the downside, right? And that, again, that's a magnet for the price. Where to enter? Well, you enter on the maximum positive gamma. You enter on this level because whoever was long on this level or whoever was playing this level, right, is plus the combination of the puts which are below. All you have to do is just kind of wait for a nice structure, right? And what I mean by nice structure is to have this sort of, you guys know, the ones who have seen my videos before, I like to play with the market structure. So we have this kind of, let's say, double top. I don't like to work it like that, but look, we have a level who couldn't break it. We have a level who couldn't, trade on the way up. That's fine, but if you're doing technical analysis, it's fine. But look, why didn't go up? Because we don't have any good or any steps of gamma with a relevant kind of size gamma to tell me the price is going to go up. We didn't have that. And then we're making a lower low here, a lower high. So we have kind of double top, we have a lower high here, and then this is the most important part. We have this excess of positive gamma, which is actually working, as a kind of pivot for me to enter the trade. So that's what I did, and I can show you here in my screen. This is where I enter in my 3 accounts, which actually I make more than $4,000. It was like $4,600 today on that trade, and only one trade. And as you can see, I only went short with 1 mini on NQ and 1 mini here, and on the 5 micros here, MNQ, and 2 micros here in my $50,000 account with earn to trade. But anyway, back to what is important. So this acts as a, let's call it resistance or reversal. Let's use that way. It's a reversal. So the price actually went there, and the rest you can see it. So now, by the time I took profits, which was 10.27 more or less, you can see that now the profile has changed more negative compared to the positive profile. So that basically is telling you, okay, this is a market that is trending lower again, as we had yesterday. And this level, 19,172, is a good candidate for take targets. So as you can see here, that's where I had my target, right? Above 19,172. I had my targets there, but you know, with experience, you kind of track the market, and I'm gonna show you why with order flow, which is in Gexbot, you can actually get out of your positions quickly if you see something that is not right. We can see also that kind of same information here on gamma. So what's gamma? What's the difference between gamma and Gets profile? So Gets profile does a classification between, let's say, positive gamma, which is coming from calls, and negative gamma, which is coming from puts. So you can see, as I said before, a clear picture of what's the, it's like a map. So you can have a clear picture what size is pulling the prices more. If it's pulling down because you got more negative gamma, or is it pulling up because you got more positive gamma? Is that sense that can give you a map and a clear and an overall picture of how is the market condition at the moment and where it can go and where is the target. So this was the first candidate for that target, for that trade. However, when we have a gamma, we also have the same look. This is the difference with Gets profile actually is that this classifies negative gamma and negative excess of gamma and positive excess of gamma. So as I say in other videos, I only like to trade on the positive excess of gamma, right? So here the picture is better. Why? Because you can see on the upside, right, we don't have much positive gamma. There's quite small size. And on the downside, we have this negative gamma, which is, the same that we had in Gets profile, 19,172 as a target. Okay. So I took my short position. I hold it until look. This is order flow, and I'm creating a video on order flow because this gives you a really nice information. So as you can see, this is the target. It give you everything that you can see on Gets profile and in gamma, but it give you the same information in one single shot, right? In one single screen. So look, this is the gamma where I enter short, and if you have a look at this is options profile. At 10 o'clock in the morning, you can see that's more or less where I took the trade. I took it around here. Is actually coming that positive. I mean that 19,472 level, which is the maximum positive gamma, which was my trigger to enter. And as I said before, this is one of my AAA triggers when I have this kind of negative, kind of, with big size negative gamma. I know this is magnet. I know this is going to pull the price towards them. I also know that it's coming from a short call, right? So someone was shorting the markets, was selling calls. And that's where we have that classification, right? But what's important is these two prices, these two short puts were actually pulling the price lower, right? But what's interesting is by looking order flow, look, I took the short here, then we have in order flow a positive or long gamma. What is long gamma? This is the convexity ladder, which is coming from this screen in the options profile in gamma. But we have it here like this. And what it's showing us is showing us the most important maximum positive gamma, maximum negative gamma in the convexity ladder, but also is telling me in the whole options change what's happening. I mean, it doesn't show me in particular, like in these levels, individual levels, what's happening on each individual level, but instead it's telling me in what's happening in the whole option change, right? So when it's positive, it means long gamma. It means some institution, some big guys like this one is buying options, right? if you can see the relative size of all the other flows, they are not that big as compared to this one, right? So this cyan positive bar, and I say positive because it's on the positive side, look, is basically telling me someone is buying options. Doesn't matter if it's a call or it's a put, it's just telling me someone is buying options. Why? Because they think that, this is a little bit more into the options space, but it's not about they are taking a long position, but more like they're thinking that the current state of the market is going to change, right? So the volatility is going to change. So the price start to trend lower, very nice and very steady. And if you guys haven't seen my video on implied volatility versus realized volatility, what's happening in the option space is if the price is trending lower or higher, doesn't matter, but it's trending in a consistent way, like 1, 2, 3, 4, 5. So the implied volatility to the realized volatility is constant, right? So people here, options guys, are happy selling options, right? Because that's what they want. They want a constant implied volatility to be, to be constant compared to the realized volatility, so they make money. But some big guy in the options space came into the market and think that regime is going to change. So they came with this buying of options, right? Now, when we combine that with Gets profile, right? So in Gets profile, we see the flows, but in order flow, we actually see what's happening, right? And we can see this is a call gamma, right? Call gamma exposure. So because it's on the upside, it's positive, right? We know there is a gamma exposure, and we know the cost of offside has been lifted. Usually, this is a reversal signal when the price is trending up, right? If the price is trending up and we see a call gamma, a call guess, most of the time it's a reversal signal, right? But there are some things we have to take into account here. First of all, we are not trading higher. We are not trending higher, sorry. We are trending lower, right? So whoever is thinking to change the current regime, right, they did it with a big size, right? They did it big, and they want this current regime to change. How do we see that, right? We see it here in order flow, and this is a warning size. So that's where I get out of my position, because I know this. I don't like this. This is a big one. Someone is changing the current volatility environment, and they want things to change. Now, the cool feature about Gexbot is this. Let me show you. This happened around 10:38 a.m. And look, everything is fine. For the guys who doesn't know, the the orange bars on the right is positive, is when they buy calls, right? And the orange bars on the left is when they selling calls. Purple bars on the right is buying puts. Purple bars on the left is selling puts. But anyway, the important part is have a look this profile, right? And have a look what happened at 10:38. Just keep an eye on the screen. I'm going slower, right? Keep an eye that most of the calls, like positive calls, are around, 22 million. This is volume, by the way. This is no excess of gamma as such. It's just volume. But have a look at 10:38. What happened? Almost there. Look, these two huge calls came into the market. So order flow is telling us that someone was buying options, and because it's on the positive side, is call guess, call gamma, and someone came in the market to change this current regime. And now when we go to option profile, we can see this. This usually doesn't happen like that, because what order flow is doing is measuring kind of flows in the whole 0DT option change. And usually we see this activity in the last 30 to 15 minutes before the options expire, like end of the day. So when we see someone kind of go speculative, really directional, this is a directional trade basically. These are out of the money options, right? So if you're in a short position, right, and you see the price going steadily lower, lower, you know the options guys are selling options and they're happy to sell options, right? But when this, you see this is a change of regime. Someone is changing the regime, right? Why? Because the price is going lower and you got this big call that I showed you before. Again, if the market is trending up, right, and you see this positive gamma, for instance, on this at 1143, when the price is at this peak, more or less, you can tell that this is going to be a reversal because someone is lifting the calls above. But in this case, it's a directional trade. Look, it's a directional call. Someone bought calls. And obviously, market makers, they need to adjust their delta by buying futures. But because this is out of the money, probably the delta was very low. That's not important. That's important to know. But I want to show you something else. Where is it? Here. Look. Another important concept of I want to share with you guys today is this is the S&P. So if you trade whatever market you are trading, for instance, we trade NQ, but it doesn't mean we only look NQ and DX. I also look into triple Q, and I also look into ES SPX. Right, this is the SPX options with translated to the ES futures. But have a look this maximum or major put gamma. See how the price actually, did like a double bottom. People in technical analysis would say. But what you need to understand is why the price kind of tend to find support on those levels. What's the reason, right? And that's something that I'm going to explain in a minute. Okay, so look, there is a concept of 25 and 50 gamma, right? What it means. So it means that when an option is out of the money, right, and the option start to approach at the money, is when options traders, they tend to take profits, right? Because the 25 gamma or the 50 gamma refers to the strike price where an option has 25% delta or 50 delta, right? Or negative 25 or negative 50 for puts. So this means the option has a 25 probability or 50% probability of expiring in the money, right? And as I said before, this is when, like what happened today in the market, when we have options out of the money and those options are starting to gain value, right? So I'm going to show you in a graph, but basically the gamma peaks at around at the money, right? So this is when an option approach at the money territory from out of the money, and the gamma is as its highest. So if you see here, this is the gamma profile, right? So imagine this is an out of the money option, and as the prices start to go, out of the money call, and as the prices start to go higher, this is the profile of gamma. So gamma has its peak between 25 gamma, 25 gamma, which is the 25% delta, and its peak is at the 50 gamma, right? So what happened after that? Look how is the profile of the gamma. So basically after that, we have what is called diminishing returns, right? And why is important to us to know those? Because it's important to know that options traders tend to take profits at those levels. Why? Again, because gamma peaks at around at the money, which is this. This is at the money, and this is the gamma peak. And then after that, this means that the delta is changing as is fastest, right? Which results in a large profit swings for long option positions. So it's a concept that probably I'm not going to explain now, but it's very difficult to profit for buying options, in the options market. So when these guys go like, let's say, naked, which when they go directional, is it's very difficult to make money. So once, and especially in zero DT options, because they expire at the same day. So the important concept for us is like, once an option crosses the 25 delta, the price acceleration slows, and traders start to see diminishing risk rewards, right? And this is an optimal. So these levels, that the 25 of the 50 delta, is an optimal time to take profits before theta decay, which is the time decay, kicks in and is going to diminish in the returns in a quicker way. So remember, we're trading with, or we're following zero DT options, and they expire at the same day. So the theta decay is crazy on these options. So what I was just saying is, like, have a look in this graph. If someone bought an option, right, a put or a call, and the prices start to move in their favor, in this case it's a call, look how the option delta change quickly. Is a fast move. It's exponential move between out of the money and at the money to the 25 delta. And then from the 25 delta to the 50 delta, you know how the options, how the delta change. So the change is not as exponential as this par. And then from the 25 delta onwards, the delta slope is minimal. It doesn't change that much. So when we combine that and we see, after, if you're an options trader and you bought a call, in this case, let's put that way, in the S&P, SPX, sorry, after you get to the maximum gamma profile, your peak of gamma, which is the 50 gamma, once you get to your 25 gamma, this is these areas where your profits are at max level. After that, you're gonna have profits, but it's gonna be a diminishing profits. And if you start to add them up, the theta decay, so your profits are gonna decrease, right? Whatever money you have made on the way up. So now you guys understand why the price go to this major put gamma and bounce, major put gamma and bounce again, right? So all these guys who bought puts, right, or who took any structure in the market which was targeting this level, actually they took profits here, right? This is 10:42 in the morning, and this one is 11 o'clock in the morning. So they take profits because they know theta decay, and as I show you now, this is the maximum. Gamma. So if I do the graph here, so it's gonna be something like that. So this is the level where we have the maximum gamma. So they know if the price start to keep going lower, right, they're gonna start to make money, but they're gonna have, remember the gamma profile, they're gonna have diminishing returns, right? And they're gonna have the risk of theta decay, which is gonna go against them. So whatever profit they're making on the move of the price, are making money here, so it's positive, right? It's gonna be diminished by theta, right? So that's why these guys, they tend to take profit on this maximum negative gamma or positive. And now have a look what happened from here to here, right? It's no coincidence that the price took resistance here at this level, right? It's no coincidence because it's the same concept. Now, whoever bought calls on these levels, right? They were targeting this level of in the S&P. They were targeting this gamma, this positive gamma, right? And it's exactly the same concept. So this is the maximum gamma. Oh, sorry for my writing. This is the maximum level of gamma, right? And it doesn't matter if the price can keep going higher. The returns are going to be diminishing returns in their P&L, right? Because of theta decay. So that's why these guys in the options market, they tend to take profits on maximum negative gamma and maximum positive gamma. And that's how Gexbot is done it. It's amazing how they did this code and they find this excess of gamma. Today was a perfect example. Now, some people think, well, what happened here? Why it didn't happen, right? Why the price didn't bounce as it did it in here? Okay, and that is if you can see here, what's happening is the maximum negative gamma it was kind of shifting, right, from this side to this side, right? So whoever guys in the options market were kind of betting on the lower prices, they were kind of adding more negative gamma on lower. Look what happened here. We don't have any lower gamma anywhere below this line, but here they started to shift that negative gamma towards this side. So I think that's a good explanation why it didn't happen. But anyway, as a trading perspective, if I trade ES, which I don't, what I would do is I would take a long position here with a stop here, long position here with a stop here. So basically in trading kind of risk management, this is perfect because you have like 1, 2, 3, 4, 5. You go like 1 to 5 risk ratio here. And here you go 1, 2, 3, 4, 5, 6, 7, 8, or 9, 10. So basically you have like 1 to, let's say 1 to 10 trade from the minimum maximum negative gamma to the maximum positive gamma. So from a trading perspective, it's amazing what you can do with those levels of gamma. Okay, so the other thing I want to show you today is quite important to, for us, for NQ traders, it's also quite important to look not only the NDX, NQ NDX, but also the triple Q. Usually we follow the NDX because these contracts are very expensive and institutions tends to come into this contract to trade, right? Triple Q has been traditionally associated with retails, but I think more more and more the retails in these markets are becoming really sophisticated and they're starting to get all these tools, so they're becoming really good at trading, and we can have very good levels. For instance, have a look this one. Look, this is a nice resistance area, right? So price is obviously everything is with gamma. Look, price get to the gamma level, maximum positive excess of gamma, and rejects the price. Try to go again and rejects the price. So if you trade this, look on this peak on NQ, we don't have nothing. You see, it's nothing that is showing me that the price is gonna reverse. But when you look into triple Q, look, you go the reversal here with this excess of positive gamma, which is this positive gamma as well, which is acting as a resistance. So remember, we like to take profits, or we like to reverse on positive when the price is coming from below to above, right? We like to take profits on these positive bars, right? And when the price is coming from above to below, we like to take profits on the negative or the red bars, right? So it's always very nice. It's a good practice to also have a look at the NQ. And what I do, I also look the SPS, right? And the SPY. And look how the SPS gives us again a very good resistance here, which is matching this positive excess of gamma here, which acted as a good resistance. So some people will say, oh, Freddy, so what happened here? Why you didn't talk about or take any positions here, right? Basically because we don't have anything here. So this is a chop area. This is where most people lose money. So as I say in my previous videos, and I say to the guys that I talk in the channel, I mean, you go 100 levels to trade during the day. You go 6.5 hours to trade. Why you want to trade on these areas where you can lose money, right? It's so random. You can easily lose money, So why don't you wait for these areas to trade, or this area to trade, right? Or this support, or this resistance? Look, you go today, you got like 4 setups where you could have make lots of money, right? And all you have to do is just be patient and wait for the gamma levels to kick. Looking at the triple Q, you would trade one here, right? You would trade the trade that I took, and you would have like, many trades to do. Now when you go and trade the NQ was fantastic. So today what I have, I had my trade, right? I was happy with this trade. Now you have this call, which was a massive call, as I showed you before. I don't say that you take profits on this kind of signal, but just if you were sure, bear in mind that someone came into the market to change the regime. And again, nothing to trade here. I mean, for gamma, you could have lost a lot of money on this area. You could have lost money here, thinking that it keep going low and then rally. Then you say, oh, it's gonna go high, and then you buy, and the price goes down. This is the areas where most of the people lose money. Why? So why don't you wait? And why you didn't wait here? This is like perfect profits. So just wait for the gamma levels. That's what I do every day. I only trade my gamma levels. This is my setups, and I show you how I made my money. So I hope you guys, I hope this is helpful for everyone out there. I really want to help everyone to understand Gexbot and to try to help people there to be consistent in trading. It's not difficult. I think the difficult part is just to wait and to be patient for these levels and for these levels, and also look in different markets. And this wouldn't be such an amazing trade today. But anyway, I hope you guys like it. Any comments, just put it below, and I'm happy to answer. And I'll come back with a promise. I'm working on creating a video on this order flow, because honestly, this is amazing. What Gexbot has done with this kind of algorithm and understanding the market and the flows is just amazing. You won't have this detail of information and data anywhere else. And it needs to change a little bit of mentality changing. So we don't talk about bears and bulls. We talk about reversals and continuations. But it's coming. The video is coming, I promise. Anyway, thank you guys. Bye.